Hey Texans, I bet you didn't know there's currently over 8,000 condos for sale statewide, and everyone has their opinion on whether they like a condo or not, but the financing with a mortgage on a condo is a very different ballgame, and you're going to want to work with someone who knows what they're talking about. This video, I'm going to briefly go over some of the loan options that work with almost every single condo type out there, and some of the pitfalls and red flags to look out for. My name is Garrett. I'm your favorite Texas mortgage broker. You find the home and I help you find the loan. And I run my own company. I'm way more qualified and experienced than most of the people you'll find. My company has very little overhead, so you're going to get a dang good deal. I'm really great at non-condo financing as well. Call, text, email, 15 minutes on the phone with me will change your life. The reason condo financing is a totally different ballgame is that not only are we approving you personally with your income and credit assets, and get a normal appraisal like any other property, but we also have to approve the HOA itself because it is a legal entity which has ownership of your property as well. The main things any condo underwriting team is going to be watching out for and guidelines that are going to be accounting for is if there's any legal action or lawsuits going on currently, that's almost always a no-go, even if it's something minor. They're going to be combing through the budget and financials of the HOA. And if it's not strong, they probably won't want to give you a loan because they're going to know in the future this condo HOA is going to require a ton of money from you. That could be for improvements or repairs, special assessments, things like that. Also, they're going to find out if special assessments are upcoming. So if they're going to spend $1 million to replace a roof and everyone's going to have to pitch in $20,000, are you going to pay cash? Or are you going to be financing that into additional monthly HOA fees? They also try to make sure that the majority of the other units are not leased as rentals, especially short-term rentals. They don't like that. And they also try and make sure that one single entity, such as an LLC or person, doesn't own a majority of the building. Because an HOA has votes, and if one person controls everything, that's a high risk to someone who's lending you money. Finally, less commonly, we have to find out if it's mixed use or not. Like this luxury condo here in downtown Austin, the lower floors may have office buildings, shops, stores, things like that, instead of it only being residential. That's a totally different animal as well. All that being said, with conventional, you can generally put as little as 3% down with up to $800,000 loan amount. And if it's higher than that, you need to generally put 10 or 15% down. FHA loans, you can put as little as 3.5% down, but the underwriting is even stricter. There are condo databases, if you Google FHA condo database, where you can search if a project you like or are interested in buying at is already approved. There can't be too many other FHA loans in the same project as well to get approval. It is possible to get a single unit approval if the FHA hasn't approved the HOA, but it's really difficult. Finally, there's VA loans, which have a similar database, but it's easier to get a single unit approval. If you're in Texas looking to buy a condo, call now.